Hi, my name's Steven. This is Trader Genius, and I've got Alan here. We're going to be talking about the rating system that you're seeing right up here. What do you do with all these numbers, how to use them, and how you can really enhance your trading with them. Alan, how you doing today?
I'm doing great. And you?
Fantastic. Let's go ahead and get right into this. Now, we've got a stock right here. It's Apple, and we have all these ratings, one for growth, investing, dividend, options, and then these other two special ones, Stock Trader Genius and Investment Genius. Could we go ahead and start with growth right here and just talk about what that growth rating means and how to use it?
Yeah, the growth rating tells you the idea, of course, is that you're looking for stocks that are going up in value. That's what the growth is. So the positive number, it goes up from -7 to +7. So a growth rating of 4, 5, 6, 7 means that the stock is moving upward in recent time frames. So it's positive value. So the asset, called the shares, is moving up, which is what one view of investing is growth rating.
Okay, so this rating seems to be very important for timing of
Yes.
trends.
Yes, that's right. And so you wouldn't want to be looking at buying a stock that you want to go up in value, because you're holding it for a while for the share prices to go up and then you sell it when you want. But the idea is that something that is getting more increasingly negative is, you'll see on a chart, is looking more negative. It's going down. And
Okay.
the point about that is you're looking for something to make you money. So that's where you don't want to get a stock that is negative on the growth. It's sideways or heading down relative to where it has been.
Okay, perfect. So as you can see, we got a -3 right here, which means the stock is currently not going up. It's actually got a negative movement right now. And you can look at the performance on all different scales right down here, the weekly and the daily. So you have all those perspectives right there for you. Okay, moving on to investing. We've got a rating of 1. What kind of considerations do we need to look at here?
Yeah, the investing rating, it goes from 0 to 7. And the idea is that if there is income, because you'll see in the middle pane, there's all those bars with little stacks of red and green on the top. And yeah, those ones. It's an analysis of how well the company is doing so far as sales and income. Are they growing as an investment in the sense that they're a good business? That's what it's looking at. And so we don't have that data for all stocks, but we do have it for most of the important stocks. And it's essentially just doing some quick math on you to say, well, for example, you can see here on the revenue column, you've got 53 billion is what that is the last column there where it is June 30th but that's moving down from where it was before. It was 58, comma 015, comma 00. Anyways, that revenue is in millions of or thousands of dollars. So their sales have gone down, right? So as a business, it's like, well, where are they going? Well, they seem to be going down right now.
Right.
And some stocks are cyclical in their nature of sales. And sometimes when they do the books, yeah, you can see it's an up, but it's a down, it's an up and a down. You have to look at it a little bit more to say, well, if it's a cyclical company, what does that mean for me? What is it? How does the stock price go? But this is, it's doing the analysis for you, which makes it super convenient to say, well, I just want the best companies. Well, then you would do a sort on the investment rating being high. Similarly, when we looked at the growth rating, if you have a column that says, well, give me the growth rating, you don't need to look at the chart and analyze, well, how's it doing and where's it going? And you don't need to look at all that. The idea of these ratings is, I just want the computer to shortlist for me the ones that have good numbers. And then I'll fine tune the ones that I like after.
Right. Yeah, and this is one of my favorite things about this specific one, or any of these really, is it gives you a certain perspective, an easy way to analyze how to value the current situation. For example, investing is a rating of 1. Now, as you look at Apple, you see a cyclical pattern here. It's pretty easy to see, but right now, as Alan mentioned before, we have a decrease. So you're seeing that reflected in 3 different categories. And what you can look at is see how the chart actually corresponds to these things over time. And that's what this is right here. So if you see we have a bad quarter right here, and then all of a sudden you get this big drop, and then it builds back up again. Now, these things, they may or may not be directly related. That's not important. What's important is you have an easy to read way to assess the performance of that business as it pertains to investing, growth, dividends, options, stock, whatever it is. Okay, great, thank you. All right, so moving on to dividend. How do we use this?
Some companies give out really good dividends and other companies don't give any. And one of the things that is statistically useful is companies that give good dividends usually do better in slow or bear markets, that their price doesn't fall as much because there's always investors that say, hey, I'm going to get a little bit of cash every quarter anyways. I'm going to hang on to this stock. And so there's the 3 major views for investing is growth, investing in the sense that it's a good business, and then dividends, that it'll, get a check every quarter, because that's really how it goes. It goes right to your brokerage account and gets deposited for you. You don't have to do anything. It's like money in the bank. You just get a bump every quarter. And so there's some stocks that have a high D rating, dividend rating, and then there's others that have very low. And so when you're looking at a strategy of what is it that you're after, and that's a personal thing. Am I looking for growth companies? Am I looking for a good business? Or am I looking for something that just gives me a check every quarter? And then, of course, you can look for ones that are combinations, but you will never find one that is high ratings in all columns. It doesn't exist. There may be one that is a bit higher than another number. That's what you'd expect. And so you have to figure out what your strategy is, because it's personal for what suits you. How long are you going to be planning till your retirement? That's part of the equation for that. If it's going to be short, well, then what are you doing? It takes some thought, and I'm sure we can explain some of that in other videos, but you'll never get top rating in all columns. So it's a blended number that you're looking for based on your strategy, what suits you. But the super easy part is, hey, just give me a list of these, and then you can rummage through them to find the one that you really like.
Perfect. And this is 0 through 7, correct?
That's right.
Perfect. Okay, great. So the dividends, depending on your style, you're going to be able to look at this and get all the relative information. And this is not just saying the reported dividend. This is based off of several things, like are they actually paying it, and all the important information that you're going to need to know if you're coming from this perspective. So this is a really helpful one for those people that are looking for that really consistent income style of investing. Okay, we are moving on to options now. This one's a little bit different. Can you walk us through this one, Alan?
Yeah, it's about liquidity. So you can see Apple has a rating of 7 because it is one of the top liquid options. So for day trading and or swing trading, where you're holding, swing trading means that you're holding something for weeks or months, or at least multiple days. The idea is that you, especially for day trading, you want to be able to get into something and be able to get out of it quickly, especially for day trading. In the case where you're making it a profit in minutes, sometimes even like half a minute. So there needs to be enough trading volume active and enough option codes that you can say, hey, I want to buy this option and I want to get out of that option. And so that rating does deep analysis, about 16 hours on a weekend for the computer to get all that data and calculate it. It is not a simple thing. And so the open interest tells you how many contracts are out there, but it doesn't tell you how many are traded. This analysis for the option rating tells you that not only is there a lot of contracts available, but they're actively traded under a lot of different codes. So there's a thing with options called strike prices. And how far out is it? Is it near or far? all that stuff is done for you. So an option rating is very useful for shortlisting stocks that you want to day trade and or swing trade.
Fantastic. And this is really important information because a lot of people always ask, where's the best place to make money? Or they'll ask about a specific stock and they'll say, what do you think about this stock? And almost every single time that's going to be based off of emotion for most people. And what this gives you is the real information that's pertinent for being able to actually trade, because as you can see, there's a green trend right here highlighted by that green background, and then we have K-band. Don't worry about these other signals. Those things are very special. We'll talk about those in a minute. But can you actually make money during this trend is based off of several different factors, and liquidity is one of the most important, because you need to be able to get in when you want and get out when you want. Because one of the biggest problems that people have is, I don't understand. I get into this stock and then the stock goes up, so I should be making money, but then they can't get out at the price that they want. So this is an oversight that can be avoided by making sure that the stock is liquid. You want to be able to get in and get out. And this rating right here is going to tell you if it's good for that or not. And this one, is this going from -7 to +7?
It just goes 0 to 7.
0 to 7. Okay. So what does 0 mean in this case?
It has no options.
Okay, perfect. And then 7 being, hey, this thing's really liquid, looking good for those.
Lots of volume on multiple contracts. And what's really cool about this is when a new stock, I'll call it that, shows up because it's becoming really active, it automatically gets added to the day trader list. So for example, Beyond Meats, it's like you may or may not have heard about that, but all of a sudden the liquidity starts to be amazing. And then it's like, oh, well, Beyond Meats is now available on the list.
We have some very special ratings to talk about, and one of them we collectively call these modes Genius Mode. And the reason why we do is what this thing does. It's different than these other ones over here, and we'll talk about that in a minute. But it gives you a little bit more interpretation of risk. And Alan, what's the difference, before we get started on Stock Trader Genius, what's the difference between these 4 over here and then these 2 over here?
The first 4 ratings are snapshots of what's been going on in recent time. Depending on what you're talking about, for like the investing, it looks back at multiple quarters for a few years.
Would you say this is similar to like a baseball card of a current snapshot?
Yes, okay. That's a perfect way to do that. Whereas the Stock Trader Genius has some past performance in it, and it also has some probability based for what the future is likely to be. So something that is rated a 5, 6, or 7 in the STG, as we call it for short, Stock Trader Genius, it has a better chance of making you money, definitely, than the things that are rated, 4, 3, 2, and 1. You're actually quite likely to break even, to lose money in the rating 1, which is where that's the real power of it. Is why are you messing around when there's 8,000 or 6,000 stocks? Why do you mess around with the ones that are low rated? Well, we didn't know. Well, now that it's done for you, it's like, well, I'm only going to look at and it is the few relative to the major, list of 6,000 plus stocks. There's not that many. There could be 200, 300, 400 that are rated 5 and 6 and 7. And similarly for the Investment Genius, this is for when you want to hold something for months or years on average, and you're looking at a year to maybe 20 months on average for holding the investment. So sometimes it'll be more years and sometimes it'll be shorter. And the idea is that it tells you how well this stock has done in the past. You need to do still a little analysis, and Stephen will explain that in some other time, to say, well, okay, I've got a bunch of really good possibilities. How do I shortlist that? And it's easy stuff.
Yep. I really like this, and I like to think of it as a dynamic risk assessment because it doesn't just tell you, hey, right now this thing is looking good. That's a big problem because that gives us all kinds of false assumptions. What this does is it measures all kinds of different things all over the board that are really highly technical in nature and not even appropriate to talk about right now, especially. But it gives you a risk assessment for the probability of the future. Now, this is not any sort of guarantee or prediction. It's simply a risk assessment that is dynamic, and this is an extremely powerful tool. All right, so just to review the different ratings for growth, you have -7 all the way to +7. For investing, it's 0 to 7. Dividend, it's 0 to 7. Options, it's 0 to 7. And STG and Investment Genius, what are those, Alan?
Those are also the 0 to 7 rating.
Perfect. Okay, so if we're going to actually start using some of these ratings, which ones is 7 always the best to get in? Or are we looking for something to kind of pay attention a little bit more to things?
Yeah, that's the funny part that you and I both know from doing lots of trading is that something that's rated to 7 is, especially with the Investment Genius, is often had a really good run, and the next trade is usually not the best one. You'd have to look a little bit at the chart. So, and this has been true for 16 years that I've been looking at these things, is when all the indicators are like turned on and ready to go, the move is already finished, that the party's over, but you don't want to be getting in at that point. So and this is just how life is for at least trading, is something that's rated a 5 or a 6 is usually much more reliable than a 7, because a 7 is exhausted in that sense. It doesn't have much left in it.
Right. And so there's a sweet spot in these ratings, it seems.
Yes, there is. And for the STG, it's got a similar thing. Anything that's a 5, 6, or 7 is good, because the stock trader is a shorter horizon, meaning you're looking at weeks, months, and sometimes years, and it uses a different trading plan. You could actually get a 7 and you'd be all right, because it's a lower analysis of it's looking at weekly candles for the assessment.
Right.
So okay. Something could be exhausted on a long-term basis, but on a shorter frame, it could be, it's still got some life in it.
Right. So just keep in mind when you're using these tools that just because it's a 7, it doesn't mean it's the best. Remember, these are just risk assessments based off of probabilities, and it's dynamic. So when you're looking at this, a 5, a 6, or a 7, use that into your own process to make sure you're not getting in on something that looks like it's already exhausted. Okay, that's it for today, guys. If you have any more questions, contact your coach or contact Trader Genius at tradergenius.com for more information, and we'll see you soon. Thanks, guys. Bye.